Be Wealthy and Smart, episode 1088.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the crowd is usually wrong. Now, that's not a popular thing to say. And lately, the crowd has been all on the side of negativity, bearishness, seeing a crash coming for the stock market, for the housing market, seeing very bad news ahead, nothing positive. I mean, we are way on the side of negativity. And there's a lot of reason for that. And there's a lot of evidence why we think that way. But there's a lot of indicators saying that things are moving in a different direction. And that's not what people are talking about. People are fixated on the negativity and not seeing the change that's coming. So that's what I want to talk about today, because I've been around long enough to see that when everyone is on one side of the boat, usually the boat is going to go the other direction, because the media for many years has told us about Y2K, that we were going to have this terrible crash because our computers weren't updated to be able to take the number 2000 from the number starting with 19 for 1999. 1998, 1997, the computers weren't set up to take the numbers starting with 20, so therefore Y2K was going to be this terrible crash causing a depression worldwide. We heard that for years, and nothing happened. Then we were told that the boom was going to go on with the internet stocks forever. It was a changed economy. It was the new internet era. This was prosperity and high PE ratios and stocks that didn't have to have earnings anymore. And nothing mattered. Everything changed, and it was going to go on forever, to the point where people that had millions of dollars in internet stocks refused to cash in and take any profits because they were just told it was going to go on forever by the media. Well, that came to an end. So whenever we're at one extreme or another, it's usually not correct. And that's where we are right now. We're at this extreme of negativity. And yet there's so many indicators that are moving in the other direction, showing me that things are getting better. The stock market is going to improve, and I'm seeing a major increase coming for stocks. So this is not what you're going to hear from other people. It's not what you're going to hear on the news, but it is my forecast for the future, and we'll just see what happens. Because back when the pandemic first happened, all the media went to the side of we're having a depression, the stock market's going to go down, this is never going to recover. And all along the way, I kept saying, we are going to have a rising stock market. We don't know what the earnings are going to be. There's going to be that gap between what earnings really are, and that's going to allow stocks to actually rise because so much money was created. So we had all this excess liquidity that was out there that found its way into stocks. And that's exactly what happened. But that was not the popular opinion. In fact, that was so unpopular that when I did an interview with someone about it, they refused to post it because it was so different from what every single other financial expert was saying. So I don't go by what I'm hearing on the news. I don't go by what other people are saying. I go by my own financial indicators. And what I'm seeing is that oil prices have come down dramatically, and they were the biggest part of the inflation that we saw. We had oil prices hit over $125 a barrel, and in June they were $115. They're about $84 now. And gas prices also have come down about 15%, but I see oil prices heading to about $60 a barrel, about half of where they were at the peak. And that is going to continue to reverberate throughout the economy, where other inflationary numbers are going to decrease because energy prices are going to decrease. We also had a lot of inflation because of supply constraints. automobiles and other commodity prices, lumber, etc., were spiking high because there was no way to really get the supply worked out. Even in housing, we saw demand for housing very strong, supply being very little. Now supply has come on board a little bit more. That's worked itself to be a little bit better, but it's still a lot less supply than we're used to. So no, I'm not seeing a crash in housing and I'm not seeing a crash in stocks. Neither one are set up for that kind of scenario, in my opinion. I also think that peak inflation is behind us. Now, tomorrow we're going to get the Consumer Price Index number, and that's what the Fed will look at to determine their action 2 weeks from now on September 21st. What I think that's going to mean is there's not going to be a 0.75% interest rate hike. There's not going to be a 0.5% interest rate hike. There might be a 0.25% or 25 basis point interest rate hike. But I think it's going to take the more extreme hikes off the table. And that is going to be surprising. That is going to allow the stock market to rally. We've also seen the dollar has peaked. The dollar is now in a declining trend, which is very good for precious metals. It's very good for international corporate earnings, for global companies who have to bring back their revenues from overseas and buy dollars. They're going to get more dollars, and that's going to translate into better profits instead of a strong dollar, which works negatively toward multinational corporations. Now, today, with the stock market being up, this will be 4 days in a row that the stock market is up, and we haven't seen that since July. But I do believe the June 16th low is the low, and we're going to new highs. I also think tech stocks are going to lead this very strongly and are going to see a very powerful rally that will surprise people, because there's still so many people short that they're going to have to cover their shorts. And the crash that people keep talking about, I don't see on the downside. I see the crash on the upside, which is that the shorts have to cover and have to pay whatever the price is of the stocks that they've shorted, and thereby it could cause some real trouble for certain financial organizations. When we look at sentiment, consumer sentiment is very negative for stocks, and there's maximum fear for crypto. So both of those are on the negative side as well in terms of what people are thinking is going to happen. Now, I've been saying this for several months, and I've been saying that I expected a low in May. We got that in June. But since that time, the market has rebounded, and people haven't believed the rebound the whole time. But I do believe that the low is in, we are going higher, and people are going to be shocked to see what happens. But as we come out of higher oil prices, as we get supply chains worked through, as some of those issues work themselves out, the surprise, I believe, is going to be on the upside. So just pay attention when everyone is on one side of the boat. It usually means that it's too crowded over there and something else might be in the offing. I see big returns ahead that are going to make up for the losses that we've had in the first half of the year. So don't be surprised if you learn that peak inflation is already behind us. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button so you're updated whenever there's a new podcast. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.